Beats Group, StoBts, is due to pay a dividend of Sek 3.05. Gits Group AB, Pubbles, StoBts, investors are due to receive a payment of Sek 3.05 per share on 21st of November. Based on this payment, the dividend yield for the company will be 3.2%, which is fairly typical for the industry. We aren't too impressed by dividend yields unless they can be sustained over time. Before making this announcement, Beats Group was easily earning enough to cover the dividend. As a result, a large proportion of what it earned was being reinvested back into the business. StoBts is set to fall by 24.4% over the next 12 months. If the dividend continues along the path it has been on recently, we estimate the payout ratio could be 52%, which is comfortable for the company to continue in the future. While the company has been paying a dividend for a long time, it has cut the dividend at least once in the last 10 years. Since 2015, the dividend has gone from Sek 1.75 total annually to Sek 6.10. This works out to be a compound annual growth rate, CAGR, of approximately 13% a year over that time. Beats Group has grown distributions at a rapid rate despite cutting the dividend at least once in the past. Companies that cut once often cut again, so we would be cautious about buying this stock solely for the dividend income. With a relatively unstable dividend, it's even more important to evaluate if earnings per share is growing, which could point to a growing dividend in the future. Beats Group has seen StoBts rising for the last 5 years at 30% per annum. Earnings have been growing rapidly, and with a low payout ratio, we think that the company could turn out to be a great dividend stock. Overall, we think this could be an attractive income stock, and it is only getting better by paying a higher dividend this year. The company is generating plenty of cash, and the earnings also quite easily cover the distributions. We should point out that the earnings are expected to fall over the next 12 months, which won't be a problem if this doesn't become a trend, but could cause some turbulence in the next year. Taking this all into consideration, this looks like it could be a good dividend opportunity. Companies possessing a stable dividend policy will likely enjoy greater investor interest than those suffering from a more inconsistent approach. However, there are other things to consider for investors when analyzing stock performance. Just as an example, we've come across 3 warning signs for Beats Group you should be aware of, and one of them is concerning. Is Beats Group not quite the opportunity you were looking for? Why not check out our selection of top dividend stocks? Have feedback on this article? Concerned about the content? Get in touch with us directly. Alternatively, email editorial.team@simplywaltz.com. This article by Simply Waltz is general in nature. We provide commentary based on historical data and analyst forecasts, only using an unbiased methodology, and our articles are not intended to be financial advice. It does not constitute a recommendation to buy or sell any stock, and does not take account of your objectives or your financial situation. We aim to bring you long-term focused analysis driven by fundamental data. Note that our analysis may not factor in the latest price-sensitive company announcements or qualitative material. Simply Waltz has no position in any stocks mentioned.